If you were to turn on CNBC, Bloomberg, all of those kind of shows, what you're going to get is their investment advice. And you're going to hear the same thing over and over again, and that is buy stocks. You don't really hear too much as far as selling, and it's only that of just buying stocks. So the advice in which you are getting is what they want you to hear, and they're never going to give you advice which could plan for a dollar crisis. As if you're thinking of holding a lot of money into stocks, quite frankly, that's extremely dangerous. Now, if you can't get out of stocks, or your willpower is not letting you go out of stocks, nominally speaking, you can be protected from a stock market crash. Later on this video series, I will explain those plays. But with all of the stock plays, options plays that I talk about in this video, that's exactly what it is a paper game. That's what it is. It's nothing more, nothing less, and you're betting dollars to win dollars. So the whole point of the reason for the dollar collapse is because that it isn't backed by anything. So the whole sense is you're holding a $20 bill, you're holding $100 in cash. Well, it could get to the point where it's just not even accepted anymore. Sort of like the Zimbabwe money. I mean, this money is not accepted anymore because they printed it out through the yin yang, which is exactly what the governments are doing these days. So that's why when you get into purchasing these real assets, whenever the problems hit the fan, as long as you've been able to, on a daily, weekly, monthly basis, to keep on going out and acquiring different products, you're going to be doing very well. So when the day or the week or the event comes when the dollar goes through its collapsing period, you can either survive it a lot better and even prosper it possibly, as there will be a lot of people who are going to prosper through this economic collapse. Now, that's the first thing you want to do, is you want to build up a strategy. And I can't emphasize that enough. Now, there's nothing wrong with going out and taking some money and just buying key assets you think you can work. That'll work. In fact, that is a good strategy. But what I'm talking about is writing things down. Write down the assets in which you have. Even write down some assets that you think might be better off to sell, because the type of strategy in which that I'll be giving mainly works towards the barter system. So if you see something you feel you don't need, you feel something that may just lose value over the time, you may want to unleash it at this moment, because whether you're trading the stock market or whether you're buying real assets, the key is if you're buying and selling, you want to buy low and you want to sell high. So if you were to trade silver on real assets on the bias of trying to sell them at a higher price, the successful ones would be ones who would buy at a lower price and sell higher. So they see a significant pullback in silver. Maybe silver goes down 25%. They find some good prices of bullion, wait for the price to go higher, and then sell it at the higher price. And that takes a lot of work as far as researching which commodities are going to do well. And I'm not going to focus that much on which ones are going to outperform the others, with the exception of the ones that I think will do better or will do worse. For example, this is a time frame where collector items, I don't see collector's items doing quite as well. And this may be the point where you may want to sell some of them. For example, say you have a silver coin that on its melt value is worth $10. But that year there was an issue, maybe it was a low mintage year, and there's a particular coin that is worth 5 times its value, say it'd be worth $50. Now, if it's going to be true that collector items don't do as well, if silver goes higher, which obviously it should, say it's this $10 coin is worth 40, maybe the $50 collector's coin most likely shouldn't go up 4 times. Instead of going up to 200, maybe it goes up to 120 and 130. So by selling that originally and then taking that money and maybe buying regular silver that's not collector but regular bullion, regular junk silver, or any other type of investment you feel is a good investment, can make a lot of good sense also. So that's a lot of the key thing as far as an investing strategy is looking to be finding the times to buy and sell. You also want to take a look at the first thing. What are the things in which you need the most? And for most people, that is water and food, shelter. You really can't go wrong with those as the key ones. You want to focus a lot on that. Now, as far as stuff that you think you're going to want, generally speaking, want money is when you have that extra money. You want to focus more on the needs than you do on the wants. But if you have enough resources to cover your needs, and then splurging out to the wants you think are useful is a good idea. And if inflation's going to get out of control, well, the products you know you're going to need, well, why not get them now instead of later? If you know you're going to need even something as basic as socks, for example, if they're costing $4 or $5 now, then inflation's going to bring it up to $11, $12, $13. It's smarter to buy it now. Obviously, you want to look at the shelf lives that things have, and a shelf life on something like brand new socks. Well, that's not your concern with stocks. It's mainly your concern of style and culture change, as it's going to last for a long time. A bag of milk or a jug of milk, it's not something you hold for a long period of time. So that's something that you want to look at also.